Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder of LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Deckers Outdoors. This stock's up 72% from a year ago levels at all-time highs going into this report. The bar is high, Andy. Do you have the data that supports the move that we've seen?
Yeah, we do. My biggest concern going into earnings is what you just said. The bar is very high. But this is a company that's performing really well, and particularly its Hoka brand. I don't know about you, but I see these shoes everywhere. They're really distinguishable. You know when someone's wearing them. People ask each other where they got them, and there's a word of mouth component to this. So, when we look at web visits, Hoka year over year, a really, really solid 45% increase in year over year web visits, which really translates nicely from a correlation standpoint to revenue we found in the past. On the flip side, Deckers does also own Uggs, which you see at the bottom of the chart. So they have kind of the best performer in terms of consumer demand increases and the worst performer. Fortunately for Deckers, we believe strongly that Hoka is a bigger part of the portfolio. It's where they're focusing their energy, and for very good reasons. So, overall, we expect a very good report out of Deckers. We expect that they will have, a really strong reason to have high optimism going into the remainder of the year and a good outlook. It's just a matter of whether or not, Wall Street feels that all of that positivity is already priced in. But from a report perspective, we are definitely expecting good things. The consumers really love this brand, and it's outperforming. Everybody else on that chart for web visits was negative except for Hoka, up 45%. Tells us it is booming and people love these shoes.
Yeah, Andy, I agree. Hoka seems to be dominating along with On. They're the reason that Nike can't get going. These small upstart companies are really taking a chunk out of Nike. But that being said, Andy, the run on this stock, Tom, 12 months, 72%. 3 years, 347% higher. So last quarter, revenues beat by 20.4%, earnings by 36%. This quarter, they're projecting slightly lower than that. Only 10% on revenue and 0.3 on earnings. Andy, number one, is Hoka, is that one brand enough? Number two, and of the other brands like Teva, Koolaburra, and Anu, are there any of those doing any damage? Are they on the radar anywhere, or is it just Hoka and everyone else?
Yeah, I think I think they're treading water and doing okay. I don't think they're going to really boost or hurt the bottom line of the company. I think the story here is Hoka. You hope that the kind of lackluster performance from Uggs this winter has already been projected into the numbers. I think it probably has. I don't think anyone was expecting those to go crazy. But I think it is a Hoka story, and I think, when we look back at one of the best performing stocks that LikeFolio has ever had, that is Crocs, and that was a single brand kind of company that had word of mouth components, was very, very visually identifiable from afar, had a lot of the same characteristics as Hoka, and that ran far beyond what anyone on Wall Street could have ever believed, and for much longer. And so I think Deckers is in a pretty good position here. I think it would be foolish to start thinking about the end of this run. I think they're just starting to capitalize on it. And when you look at what's happened, like you mentioned with Nike versus On Running, there's a lot of runway in front of these companies because of Nike's dropping the ball over and over. And I think we need to give these companies some room to run. I think we also have to, clearly understand that there's volatility built into a single brand run like this. But we've seen it in the past, and it can work for far longer and for far more duration than people anticipate.
Yeah, Hoka brand's last quarter said net sales increased nearly 35%. UGG brand's net sales increased 13%, and their margins are expanding. But Andy, the question is, with it at all-time highs, Do you get in here based on your data, or do you maybe wait for a pullback on this stock if we even get one?
Yeah, I think if I'm trading earnings, and if you really forced me to make a call on earnings, I would play it to the upside with the downside risk being strictly limited using one of the spreads that you guys are so good at creating. In terms of long term, I absolutely put this on my watch list and look for any pullbacks of a significant size, because I do think that companies like this tend to be very volatile, and there tends to be great entry points along a rise like these companies can have. And so long term, I think you probably can wait for better prices just via the natural volatility of the stock. But short term, I think the company's going to have a good report. They're going to have a good outlook. And Wall Street seems to like buying this stock. So that's the way I would play it.
Yep. It seems like dips have been scooped up over the last couple of years in there. All right. Great stuff. As always, Andy. Have a great day.
Thank you. You too.
All right, that's Andy Swan, co-founder at LikeFolio. You heard him, Kev. I mean, the RSI is getting at 67, getting close to overbought levels at 70 on that R relative strength indicator. But like you and I look at things like this, it's like they could beat on earnings, they could beat on revenue.